Thank you for joining me for our chart of the day, which in brief is just another reason to be bullish. What we're seeing is a number of factors coming together that point to additional gains in the stock market. We recently passed the record for the longest streak without a 5% correction. The longest streak previous to this one occurred in 1996. We've now gone a long time without a correction, and certainly there is every reason to expect a correction just based on time. That correction is unlikely to be the beginning of a bear market. Let's look at what happened after the previous longest streak. That ended in 1996, and the market rallied almost straight up, 30% gain in 7 months. There was a pullback, but ultimately this market led to the 2000 top, which was 138% above the level of the pullback. The pullback is most likely going to be a buying opportunity. Now, I know many investors are concerned about valuation. And one of the most popular valuation indicators is the CAPE. Well, in 1996, as the market was setting its record, the CAPE was at its highest level except for 1929. And it went on to gain even more as well as the stock market. So valuation also not necessarily enough reason there to sell. On average, these are the previous streaks that lasted more than a year. And what we see is there was one down year after this type of event. And that occurred in 1962. And that sell-off that followed the streak was actually rather unexpected. The SEC even formed a commission to look into what caused it. And part of the reason was President Kennedy at the time threatened to take over the steel industry, among other miscues in his speeches. So what we had was an aggressive president making comments that did not benefit business that caused that sell-off. We haven't seen anything like that since. We've come close, but we haven't seen anything like that since. On average, we should expect a gain. We should expect stocks to be higher a year from now, just based on history. That's all I have for now. Thank you for joining me.